Ether's down 8.5% this week. Bitcoin's down 8. Bitmine is down 20. What's happening here?
Scott, I think we're still seeing the repercussions of that April 10th crypto deleveraging event. It was the biggest deleveraging event ever. And there are still, I think, some market makers that have some balance sheet issues that are trying to raise capital. So I think that this is leading to a market that is kind of raised. Every time we get a bit of a rally, there's some capital trying to be raised. And I think that's what's suppressing crypto for now. That's, of course, going to end soon, but I think that's led to why crypto has underperformed equities since October 10th.
Can crypto treasuries, like yours, for example, can they trade as well or in tandem with a cryptocurrency itself, or does one have to trade at the expense of the other? If I'm going to see money flow into Bitcoin or crypto treasuries, wouldn't it then come out of the actual pure play coin itself?
Not exactly, Scott. For instance, when Bitmine has shareholders and institutional capital comes in, and JP Morgan, Invesco, BlackRock are buying big stakes, then that capital is then used to buy Ethereum. So it's actually going back into the ecosystem, but then it's going into a vehicle like Bitmine that's actually a permanent holder. Bitmine owns 3.5 million Ethereum, more than 2.9% of the supply, but now that is not going to be subject to liquidations because there's no leverage used to hold that Ethereum. And then at some point, that 3.6 million or 3.5 million Ethereum is going to be staked and then generate nearly $400 million in net income. Well, that can create returns for shareholders. So in a way, a crypto treasury is actually a pretty attractive equity because there's an income component, plus there's, of course, that ability to grow your Ethereum holdings per share.
But what if crypto treasuries become more favored than crypto itself? There's no negative impact for either the way that Ether or Bitcoin would trade if just more money floods towards the treasury part of this story?
Well, one, it's a conduit because, as you know, equity managers, many of them, the 4,000, can't own crypto directly. So they have to get exposure to Ethereum by buying a stock like Bitmine. And Bitmine is the 438th largest stock in America today. It's not that different than if someone wanted to have exposure to energy. They can buy oil and trade a commodity, or they can take like oil barrels at home, or they can buy an oil-related stock, either a major or something in the supply chain. That's what crypto treasuries are, is essentially an asset class that gives you direct exposure to the crypto asset.
All right, let's pivot to the market itself. Is your confidence at all shaken in where we are and what you thought the prospects for an end-of-year run could be after what we've seen this week?
Well, it's never fun to see markets wobble and then stocks that are quite popular like AI and the quantums and nuclear come down so hard. But it is consistent with the idea that, we were up 6 months through October, so the market's overbought. We expected 2 weeks of consolidation, which is what we're getting. And then, of course, as you know, there's hawkish Fed talk, so there's a bit of a tantrum the market's having. But between now and year end, we still have really good seasonals. The earnings have been good. Sentiment has flipped negative, Scott, as you could tell. I mean, the AAII went to negative 17.5. So I'd say the risk reward is still really good for equities into year end. And yeah, I think the S&P will be over 7,000 by the end of the year. In fact, maybe over 7,000 by the end of the month.